I wanted to get your feeling and your vibe of this market, which I think a lot of people just feel some uncertainty because the economic news has been all over the place, but they're feeling good on a 400-point day, right?
Yeah, that's been the tricky part, Nicole, is that the emotions change one day from the next regarding the point spread, obviously. But ultimately, I think investors would do themselves a favor if they allow this market to prove them wrong and get them out rather than assume that we're just going to go lower. I've never seen such pessimism in a market after a one-day move, and it doesn't matter when it occurs. It seems like we get one day, hundreds of points lower, and wow, the end is near, everybody's bearish, etc. I think investors really need to cue in on a level, and that level in the cash index is 2,800, and I think they can use that as a pretty good support level. And I'm not saying to micromanage it, but if they're trading passively in their 401k or their general account and they're wondering whether or not to raise cash, that 2,800 level is a big level from which they can take positions off if we break lower, or sit tight as we are right now and allow this market to continue higher.
Right, so watch the level of 2,800 and don't feel like the sky is falling every time we have a little bit of a sell-off. I mean, so it sounds like you have some optimism in the market, no doubt. You even have some names that you like to invest in. I mean, you know, a name like Twitter, for example, which has had a lot of headlines, another hack, right, the actress, but they've sort of changed how they're doing this, changing the tweets by text, the mobile security flaws that they're fixing now with that. But the big picture is you're a fan of Twitter, right? Why?
Well, I'm a big fan of Twitter. This is amazing to me. This is one of the companies out there. I have never in my career seen a company get as much free publicity as Twitter does. Not a day goes by that somebody doesn't talk about the president's tweet or somebody wanting to follow someone or news breaking on Twitter. Not only do I use it personally for news, financial news, watching tweets from this show, which are excellent, by the way, but ultimately it's a company that is doing very well, and people don't realize that. This is the company that over the last 4 quarters have brought in over $200 million of free cash flow. That you can't hide, you can't mess around with that. That's a real number. They now have $6 billion in cash, and they're only trading 4 times book, which if you compare that to a Facebook's trading 6 times book. So it gives them some upside potential, but I don't believe people are realizing how much money is going to be spent in this coming election on Twitter. I think that is going to be off the charts, and I think that's really going to boost their revenue and EPS, and I still think around $45 a share, there's still an opportunity for upside here.
Right, and you mentioned that it's in the S&P 500, which helps it along too for everybody who has to mimic that, right?
That's right. People don't even realize that. I talk to people all the time. We own it in some strategies outright, and they say, oh, why do I own Twitter? I'm not so sure about that. Now, that was a year ago. They love Twitter now after the performance. But, ultimately I say, well, if you own a Vanguard S&P 500 fund, you own Twitter because it's in the S&P 500. Therefore, if you own a passive index, you own it.
All right, well, I got to get to your other pick, and that's MDC, which is having a little bit of a breakout. Your quick thoughts on that housing play?
Yeah, the housing market obviously has caught fire recently as interest rates have continued to go lower, and these are stocks that really haven't gone anywhere. This is a pick that we really like. I think it's still flying underneath the radar. This is a stock that yields 3% dividend, so you get paid while you wait. It's only trading 10 times forward earnings, and those earnings are growing at 20%. So the PEG ratio is very attractive here. But what I like about it from a technical perspective is it's gone nowhere over the last 2 years, And finally, on the last earnings report, the stock broke out. It's under accumulation. Institutions are starting to really buy this name up, and I think that there's still upside in this name. And it's under the radar. A regional housing company. It's not, the big name that's already under the guns by some of the institutions out there, et cetera. So I think there's some more upside here.